to shed some light on this very controversial oil deal in Uganda. We're joined now by Duncan Clark, the CEO of Global and Pacific and the author of the Crude Continent. Thank you so much, Duncan, for your time today. A lot of confusion about Tullow Oil and, of course, the rights that are going to be offered. As we said earlier, Uganda earlier in the week leaning towards offering Tullow a license, and now we hear news that it's not going to. What are you making of all of this?
Well, there are two things here really. There's the exploration block 3A, which contains the Kingfisher oil field.
Yeah.
And this is now moving towards, through development, onto production. So what happened was that the government decided that in effect it would raise the question of Tullow reapplying for the license for production, which hadn't been completed. Now that's one side of the equation. The other is the exploration acreage outside of the field that could be put out to the market to bid. This comes back to a matter of resource nationalism in Africa that is creeping in, and also another factor that's creeping in is revisionist strategies or policies by governments post-contract, subsequent to different operating companies having had a
Why do you
deal in
think that
place.
is, though, Duncan? I mean, we also saw some tension coming through with Heritage Oil.
Well, the Heritage case is a bit different. That's a claim for capital gains tax on the transaction of a sale of properties to Tullow that went down a few months ago, and then subsequently a capital gains tax claim, which was being disputed by Heritage with the government. So I think this is part of a realignment, if you wish, of the sort of balance between the companies and their interests on the one side and the government and its interests on the other, which are seen as now at the cusp of production, revenue, and, if you like, wealth creation, wanting a bigger share of that pie.
Well, given the fact that you are very close to the pulse of the oil market on the African continent, Uganda, very new to the oil market, do you think they're playing their cards right?
Well, I think it's unwise to readjust the contract arrangements for companies subsequent to existing deals. To have got from a virgin frontier territory such as Uganda was over the last decade to where they are now has taken a lot of investment risk and operating effort by Tullow and partners. So to rearrange the landscape at this moment is not advisable. I think that the governments in Africa should remain competitive at the very top of the food chain, if you like, across the world for exploration dollars and capital. We are in an industry with cyclicity. These are long-term investments. It does require competitive posture. And I think even though others do it, and you see it in Libya, you see it in Algeria, you see it elsewhere in the world, Venezuela, Russia sometimes, it is not a track on which the government should be advised to follow.
Well, let's look at Tullow Oil's track record on the African continent. They've been around for a very long time versus the likes of Heritage. Do you think that African governments are perhaps forced to go to these multinational companies as opposed to looking elsewhere?
Well, Tullow has been in Africa around 2 decades. In fact, it's probably got a somewhat equivalent track record to Heritage, although they're now more or less out of Africa into other opportunities elsewhere. But Tullow built up slowly, and it got its portfolio put together through acquisition of Energy Africa, later Hardman Resources, and it's still a relative minnow in the oil game, with market cap around 15, say, billion pounds at the present. That doesn't compare to the sort of large super major companies where they're in the 150, $200 billion range. So in between the top and the bottom, there are 600-700 companies in the continent. The government should appeal to the industry at large and should put its bid rounds out and its terms not favouring one or the other, or even domestic is against foreign interests, in order to sustain competitivity and attract the maximum of risk and investment capital.
Well, Duncan, when you look at the oil markets in Africa, you know, we are creating wealth, but unfortunately a lot of the revenues do not land up in the hands of the right people. That is one of the most controversial things that have been happening for some time now. Do you think that is going to change? Do you think we should be beneficiating far more from the oil that is produced on the African continent?
Well, the creation of the wealth, if in the oil industry you're talking about, comes out of the primarily out of the upstream, 75-80% of the capital investment, and then the upside out of discovery and development. That goes to government coffers, to treasuries, to ministries, and it's up to them to manage those funds effectively and properly. And they have the responsibility and duty to manage, in effect, the distribution thereof inside the country, post-contract. And therefore, it's not in the remit of the oil companies. So I see this as an issue for the politics and the governance of the country.
Very quickly, we're looking at Sudan as well, and obviously we know the conflict that ensued there. Do you think it's going to happen in Uganda as well, very quickly?
Not in the same way, no.